Namaskar and good evening, traders. Tonight we are on the 29th of December. It's a Thursday evening, and we had a big turnaround from the market in today's trade. Which reminds me, yesterday I could not share my market views as I was traveling, was in a remotish kind of a place where Wi-Fi could not support me to share a video. Nevertheless, the expiry day was quite eventful. We are looking at the daily time frame here on the Nifty month futures, and we've got a pretty big outside bar and a pretty long lower shadow, which clearly reflects the fact that after opening week, the index clearly bounced back sharp enough to take out yesterday's high, which in return created this big outside bar. Outside bar is a situation where you get a higher high and a lower low on a daily time frame. The price behavior on lower time frames essentially takes the shape of a broadening triangle, where on the upside you have a higher high, which brings in positivity to the market, and when you look at the lows, it's lower lows, which brings in negativity in terms of demand and supply. I look at these kind of broadening markets as a sign of confusion, because the market is not in a well-defined trend, not to mention the fact that underlying choppiness and volatility will be at an extreme. If you were long overnight yesterday, today morning you will get stopped out, and if you created any kind of short position by the time it was 3:30, that shorts probably would have also got stopped out. Unless traded exceptionally well, these kind of broadening markets, situations, conditions leads to a bad time for short-term traders. In fact, today itself I got badly stopped out in one of my short positions in SBI Live based on the daily time frame, but then I paid the price. At the beginning of the day it was looking really good, but then towards the afternoon with the overall market. Let's come back to the Nifty. So what's happening? If I take a look at the short-term trend using the 75-minute time frame, I do not get much clarity, confidence about either the underlying trend of the market or the underlying momentum of the price movement. What I can see for sure and confirm is that it is volatile, it's choppy, it's volatile, and it's likely to stay. There is no clear signs of direction from the 75-minute time frame, and so because it's directionless, because it's choppy, it's better that we let the market decide its direction, let it decide its underlying tendency, and then we can take some directional call. In terms of levels, we have a market which has bounced back and made a new high in terms on a day-to-day basis. We had marked 18,200 to 18,250, and that should be the level. My spread indicators based on the momentum is suggesting some divergences shaping up. Whether they will work on the downside or not, that needs to be seen. But level wise on the downside, today's low will be an important one, which is very close to the psychological 18K mark. Today's low on the Nifty future was 17,985. So it just teased the 18K mark just to flush out a few weekends, and then just bounced back. So I'll quickly reiterate, short-term trend is non-directional, underlying volatility is high, and it will be better that you wait out for some stability and then take a directional call. 18,200 to 18,250 is the level on the upside. 18,100 seems to be a 50% mark of today's bounce back from the low to high, but of course the psychological 18K is the crucial support for the index. Considering tomorrow is the last day of the week, the month, the year, I would suggest that trade accordingly, cautiously, and try not to carry any heavy overnight or over the weekend positions. Now, it was the last hour particularly that saw beautiful high momentum movement. In fact, this reminds me of my days of 2007-8, when particularly on the monthly expiry, because during that time weekly expiry tiny, I clearly remember during those times Thursday 3 p.m. and boom, there will be a big move either on the upside or downside. And we did some bit of research, what kind of data led to those kind of volatility, and it was primarily the rollover data, wherein the rollover was not up to the average mark, wherein the institutions will pay a higher price, the roll cost that is, and roll their positions, which led to that movement. So that kind of a movement, almost similar to that kind of a movement, was noticed in today's trade. Nevertheless, when I was looking at the FII data, I saw a mild selling number. Provisional CM cash market provisional numbers were actually negative to the tune of 572 crores. Of course, these numbers are small because of the fact that institutions are in a holiday mode, but nevertheless, 1, 2, 3, 4, 5 consecutive days of FII selling numbers coming in. And of course, if you take a look at the DI numbers, it will give you a completely different picture, thanks to the liquidity that our mutual funds are enjoying. So coming back to the market, Nifty, we discussed. Bank Nifty, phenomenal move, huge range expansion on my range indicators, big outside bar. We had levels of, if you remember, 42,900 to 43, and then this Fibonacci confluence, which is close to that 43,300 kind of a zone. That's exactly where the index have found itself. Thanks to some good move coming in from stocks like Axis Bank, Bank Nifty has moved into a nice structural uptrend. Nifty does not have that directional clarity, but Bank Nifty, as I look at it, tells me that there is signs of structured, well-defined short-term uptrend in place. Any kind of a drop, and if you see this movement that you've seen in Bank Nifty today itself, any kind of a short-term correction, and if you consider close to that 50% mark, kind of confluences well with the previous swing highs. A good sign of an uptrend is when prices come down, highs should be respected and lows should form. So a tad below 43K you can use as the short-term support. Any kind of banking names like Axis or ICICI or SBI, you will find it to be in a structural uptrend. In fact, I can show you the chart of SBI here. There you are. 75-minute time frame is in a beautiful, well-structured uptrend. And so you can use any kind of short-term corrections as a buying opportunity. Now, if you look particularly at this chart, you will see the extent of the sell-off and now the extent of the bounce back, right? So these are not easy times for any kind of a trader, especially if you're a short-term trader, because the directional reversals are extremely sharp in this case, both from up to down as well as from down to up. So we just have to deal with this. Please, let's try and go through this, pass this, and then markets definitely will give us some opportunity to get our returns back. Now, there's not much clarity or information that we will get if we take a look at the sectoral indices, because most of them gave similar kind of a look of the big move, except media. Media looks weak. Media could not mirror the kind of movement that majority of the market actually delivered towards the last hour's trade. And media, even on the daily time frame, is in a pretty strong downtrend. Any kind of a slip below today's low, and I think the pack is in trouble. It's already in trouble, but can follow through further on the downside. I will quickly take a look at the global markets before we round it up tonight. And US markets are trading higher. 29th of December, and the markets are live. S&P 500 is up over 1%. Dow Jones is almost close to 1%. It seems like an inside bar for the US markets as of now, staying within yesterday's range. Remember, yesterday was a big sell-off for the index, and today it's kind of holding itself well. I can see a bit of divergence is shaping up, which is good news for the weekly sell-off. Can give us a bounce back. If that happens, that's good news for us. And it reflects SGX is close to up 100 points, and it's extending further, 18,374. So it seems like the index wants to close the quarter, the year, the month on a positive note, and mutual funds will definitely try to make sure that their NAVs they close at a much higher level, which will help to show good performance numbers. So yeah, so I think with this we can sign off, and just keep in mind that these are the few stocks which I've kept on my radar on the 75-minute time frame. From a long point of view, if it at all gives us any opportunity, amongst the metals, it's Tata Steel, amongst the bank, Axis, ICICI and SBI. Infosys can be an interesting turnaround bounce back candidate, and so can be ITC. Asian Paints I have discussed with you earlier. There's one more stock you can keep an eye on, that is Larsen. Very important today's high-low range for this particular index heavyweight. So having said this, thank you. And I'll take the opportunity to wish you a very happy New Year, much earlier than the 1st of Jan. That's we are heading towards on Sunday. Thank you for following my work. Share your feedback and thoughts. Until then, take care of yourselves. Trade well tomorrow. Enjoy the weekend, and be back on Monday. Yes. Thank you. Good night.